Have you noticed how the future of energy-efficient tech and advanced materials is quietly reshaping industries you interact with every day? Imagine a world where every touchscreen, every smart panel, every industrial interface could be thinner, faster, and more energy efficient without changing your daily habits. Now, what if I told you there are small-cap NASDAQ penny stocks quietly leading that charge? Companies so under the radar that most investors haven't even heard their ticker symbols yet. But the tech giants, the Apples, the Googles of the world are watching closely. In the next few minutes, we're diving into two overlooked stocks, both trading under $5, that tie directly into these massive tech trends. One is revolutionizing flexible electronics. The other is driving materials innovation for biotech and industrial applications. By the end, you'll understand why these tiny tickers could have asymmetric upside while still acknowledging the risks. Here's why you need to stick with me. On this channel, we combine storytelling with real metrics so you can make sense of complex trends without feeling lost in spreadsheets or charts. I've spent years tracking small-cap tech and biotech movers, and I've seen similar penny stocks turn into multi-bagger opportunities. Today, we're not just listing numbers, we're unpacking why these companies exist, what real-world problems they solve, and why the market might be undervaluing them right now. Think of this as your insider lens into tech and material trends before Wall Street notices the buzz. Before we dive in, let's reset our mindset. Investing in penny stocks isn't about instant gratification. It's about owner mentality, patience, and recognizing asymmetry. Here's a mantra I use. Look for underappreciated optionality and act where others hesitate. Most investors get trapped, chasing hype or selling too soon. Smart investors, they spot trends early, understand the risks, and wait for the asymmetric payoff. Missing this opportunity isn't just a loss of money. It's a loss of insight into tomorrow's technology. Keep that in mind as we explore our first stock. Crown Electrokinetics, ticker CRKN, is a small-cap pioneer in electrochromic technology, essentially the science behind smart glass that can change opacity or tint with the flick of a switch. Think of it as the next evolution of energy-efficient windows, cutting heating and cooling costs in commercial buildings, automobiles, and even aerospace. CEO Q recently highlighted that their flexible, transparent electrodes are outperforming traditional alternatives, citing partnerships with Tier 1 automotive and architectural suppliers. And here's the kicker. While CRKN trades under $2 per share, the market for smart glass and energy-efficient building materials is projected to surpass $10 billion globally by 2030. If CRKN captures even 1% of that market, that's over $100 million in potential revenue. For a company currently valued at around $15 million in market cap, you can see the asymmetry. Financially, CRKN's revenue is still small, roughly $200,000 last reported quarter, but this is typical for companies in high R&D, early-stage tech. Cash burn is real, and they'll need capital for scaling manufacturing. Risk alert, execution, adoption delays, and larger competitors, like Corning and View Incon, could pressure growth. But here's what's interesting. CRKN's technology is lightweight, flexible, and adaptable, making it relevant to smart devices, automotive HUDs, and architectural glass. Sectors where tech giants like Apple, Tesla, and Microsoft are actively investing. It's not just glass, it's a platform for multiple applications. Recent updates include a patent approval for advanced transparent electrodes, and the stock has been relatively quiet, trading in a narrow range. That silence could change quickly once commercial contracts roll out, especially as ESG and energy efficiency mandates pick up pace globally. So, the story here is simple. Small current footprint, big potential upside with clear real-world applications in industries everyone already knows, automotive, architecture, and consumer electronics. And just when you think you've digested CRKN, we pivot to a stock that's even more behind the scenes, but potentially just as transformative in a completely different sector. Teknova, ticker TKNO, is in advanced materials and biotech research. focusing on customized reagents, solutions, and consumables for labs and industrial applications. At first glance, it might seem niche. But here's the story. Every biotech breakthrough, from mRNA vaccines to CRISPR gene editing, relies on the materials Teknova produces. CEO Dr. Farhan Siddiqui emphasizes that their goal is to reduce lab friction and improve experiment reproducibility. In plain terms, if Teknova's reagents work better than competitors, they save companies months of time on a bind and millions of dollars. That's why their customer base spans pharmaceuticals, industrial biotech, and academic research labs. Financially, TKNO is trading under $3 per share, with a market cap around $80 million, while their addressable market in life sciences consumables exceeds $20 billion annually. That's huge optionality for a company still in growth mode. Alpha Teknova recently expanded operations with a new production facility in California, signaling ambition to scale revenue by 30 to 40% over the next 12 to 18 months. Analysts note that Teknova has high gross margins, low debt, and recurring B2B contracts, all strong indicators of sustainable growth. But of course, penny stock risks exist. Execution risk, reliance on niche customer segments, and competition from giants like Thermo Fisher and Sigma Aldrich. Still, the growth optionality, combined with Teknova's role as a key supplier to cutting-edge biotech, is compelling for patient, long-term investors. Think about it. Investing in TKNO is indirectly riding the wave of biotech breakthroughs. When vaccines, gene therapies, or lab automation grow, companies like Teknova often see parallel revenue spikes, sometimes before the broader market realizes it. Let's compare these two visually. CRKN, with a $15 million market cap, is tackling a $10 billion market. That's less than 0.2% of potential market value priced in today. TKNO, at $80 million market cap, serves a $20 billion market, roughly 0.4% of potential market value priced in. Conservative scenario? CRKN could see 2 to 3 times revenue growth over 5 years if adoption in commercial and automotive glass picks up. TKNO might realistically grow 3 to 5 times in revenue if biotech labs expand and scale. Optimistic scenario? Both companies could more than double their market cap within 3 to 5 years if adoption accelerates and commercial contracts solidify. Think of it this way. Small moves in adoption rates create large valuation gaps, which is exactly why asymmetric risk-reward matters. You're not betting on the immediate spike, you're betting on long-term tech adoption trends, where the upside meaningfully outweighs the downside. Now, I want to hear from you. Which of these stocks intrigues you more? The smart glass innovator CRKN or the biotech material supplier TKNO? Comment below with your choice and why. Imagine looking back in 5 years and realizing you spotted these trends early. What a powerful moment that could be. And if you found this analysis valuable, don't forget to like, subscribe, and share with a friend who's serious about understanding the next wave of tech investment. Remember, nothing here is financial advice. We're discussing trends, market potential, and behavioral lessons to help you think like a smart, patient investor. Here's the bigger picture. CRKN and TKNO complement each other in a tech-forward, innovation-driven portfolio. CRKN rides the energy-efficient, sustainable materials wave, aligning with clean tech and ESG trends. TKNO taps biotech and industrial research growth, benefiting from lab automation, genetic breakthroughs, and pharmaceutical expansion. Holding both gives exposure to high optionality sectors, balancing material science innovation with biotech infrastructure. You're not just picking 2 penny stocks, you're exploring themes that could define multiple industries over the next decade. Here's the behavioral takeaway. Most investors overlook small cap opportunities because they're quiet, illiquid, or underfollowed, but if you can patiently observe, understand the story, and act where others hesitate, you're already steps ahead. Think back to early investors in Tesla or Nvidia, those who acted while the world hesitated. You don't have to be first, but you can be early enough to capture asymmetric upside. So, reflect, Which story resonates more with your portfolio philosophy? The futuristic energy-saving CRKN or the biotech backbone TKNO? Drop your thoughts below. And as always, like, subscribe, and share to keep sharpening your investment instincts. In next video, we'll explore another set of under-the-radar NASDAQ innovators, diving into companies tied to AI and green energy that few are watching. So, stay tuned.